like to I would like to extend my special thanks to each one of you for taking time out of your busy schedules to be part of the first webinar presented by AMG Invest. As the saying goes, well begun is half done, and it's your valuable participation in our first webinar that would act as an energy booster for us to do more and more events in the future. AMG Invest was created in an endeavor to provide the best avenues of investment to any person who wants to invest his or her hard-earned money. Our strong belief has been that always money grows, or AMG, and that choosing the right investment options for hard-earned money is what each person must do. The plethora of financial investment options and their marketing with financial jargon that people cannot easily understand makes the selection process a bit tedious and worrisome. Making the right choice of investment is a key decision that every investor must make. And AMG Invest is the right partner in helping every investor make that right choice. I'm Meenu Shashikumar, and AMG Invest has been my thoughts and experience put together based on my more than a decade of working experience in financial services sector across India and Middle East. AMG Invest is the official franchising partner of IIFL Securities Limited, one of the largest independent full-service retail and institutional broking house, along with being a leading investment advisory firm in India. Through the medium of this webinar, we are endeavoring to provide you with information and awareness regarding equity markets. And for taking us through the process, we have with us today Ms. Konina Mukherjee, the regional trainer of IIFL Securities. Speaking about Konina, she comes with more than 20 years of experience in banking and financial sector. She has worked with brands like HSBC and American Express Bank, a science graduate with MBA in marketing from Calcutta University. She holds awards in financial planning from FPSB in insurance, retirement planning and investment planning, insurance advisory from the Chartered Insurance Institute of UK, and a certified professional behavioral analyst, CPBA from TTE USA. So without further delay, let me hand over to Ms. Konina to take us all into the world of equity markets. And once again, thanking you all for taking out this time and joining us for this session today. And for any future further queries or like support, we have our sales manager, Renuka, who can guide you through the journey. Thank you all. Welcome again to AMG Invest.
Thank you so much, ma'am, for such a wonderful introduction. A warm welcome to all of you on behalf of IIFL Securities and AMG Invest to this webinar. So we will keep it very, very interactive. It's not really a discussion, neither is this some kind of a training or nothing to do with schools and colleges. Okay, so yes. We will talk about something which we deal with every day, but probably we don't give it so much of importance as to consider it something which requires specialization, and for which you must have a dedicated person who will handle your investment. So we thought what could be a better time than to start the new financial year with some kind of insight into the world of investing, so that you can actually make your money work for you instead of you working for money. So how many of you have heard of Warren Buffett? So you can use the chat window to respond, or you have a reactions button at the bottom of the screen. You can just give me a thumbs up. So how many of you have heard of Warren Buffett? So I could see Yamini ji raising her hand. So has Kajal ji. She's given me a thumbs up. How about the others? You've not heard? Okay, Geeta ji also says yes. Great. So, if you're into investing, I'm sure you would have heard of Warren Buffett, one of the richest and oldest investors of the world. And this is what he has to say, that investment is no rocket science. However, you need a specialist to deal with it. And if you don't make your money work for you, you will work your entire life for money. So when you work for money, you save. But when you want your money to work for you, you invest. So that's the basic difference between saving and investing. And with that, I shall start sharing my screen. And I request one of you, maybe Meenu ji, to confirm if the screen is visible. Are you able to see the screen, ma'am?
Yes, it's
yes,
visible.
Okay. So we shall talk about the basics of equity market. Now, what's equity according to you? So you can use the chat window to type a few words because the speaker has been disabled for the participants. So why don't you use the chat window? What is equity according to you? Or if you have heard of shares, what do shares mean to you? So is it only fear? Is it only risk? Is it only no, I better stay away from it? Okay, so what is equity? What is shares? Anyone? So what according to you is shares? So you can give your thoughts, okay? You needn't be right theoretically, whatever comes to your mind. So it also could be fear. So I'm scared of it, don't talk about it. I don't want to do anything with shares. That could also be your answer. Okay, Kajalji, investment, great. So, okay, share just fun or challenge. Okay, that's nice, that's interesting. So fun is good. What about the challenge part? Who handles the challenge? Or why is it challenging? Okay, so let me just be a little elaborative here. See, when a corporate or when a company begins, or when you start your own business, okay, there are two ways in which you can raise funds for the business. Okay, apart from what you have for yourself, that is maybe your savings, which you would want to put into your business. There are two other ways in which you can raise capital for your business. One is borrowing from the public in such a way that you will return the capital after paying a certain amount of interest every year. That's one way of borrowing money from the public. Okay, but there's a liability on you in the sense that whether you make a profit or you book a loss, you must pay the interest to the public because you have borrowed under the condition that you're going to repay the capital with a certain amount of interest on it. Very similar to what the banks do when you make a fixed deposit with them. So you pay the bank money and the bank pays you a certain amount of interest on your investment, and then the bank pays you back the capital that you had invested. So something very similar to that. So there's a commitment that you make that you're going to pay the interest along with the capital to the investor. The other way is you raise capital from the public in such a way that you will share the profit with them if you make a profit, but you will also share the loss with them in case you book a loss. So these are the two ways in which a company raises capital. Both have got its plus and minus. For the first method, the minus point is that even if you book a loss, you will have to pay the interest. But the plus point is that even if you make a profit of 50%, if you had promised an interest of 6%, that is what you're going to pay to the public. You don't have to share the 50% profit that you've made. For the second part, where the investor becomes equally responsible for the losses that you make as well as the profits, over there you will share the losses and profits in the ratio in which you have incurred them. Okay. However, what is the negative point? Can anyone tell me? The negative point here is that even if you book high losses, you will have to share that even if you book high profits, you will have to share those high profits with the public also. So all methods have got its plus and minus. However, both are important. Okay, because when you in the books of the company, both have got its significance and both have got its merits and demerits. However, it's a perfect balance of both that is required in order to raise a capital before you start your business. So equity deals with the second part of investment, that is when a corporate or a public limited company raises capital from the public by issuing shares. So when they issue shares, the shareholder or the investor becomes or gets a part of the ownership of the company in the ratio in which he has invested. However, as I said, he will get a part of the company's profit in the ratio in which he has invested. However, he will have to share the losses as well. In fact, that is what makes the equity market or the share market risky. Okay, so-called risky, but believe me, I've been associated with the finance sector for over 20 years and with the stock market for, I think, 15 years. The market doesn't scare me. So all I find is, excitement over here. because maybe I understand a little bit of it. So that little bit of understanding actually helps me to mitigate the losses. So if you have an understanding of the stock market, of course, it doesn't come in a day. It takes decades, it takes years, it takes a lot of studies. Then you will find that the equity market is the easiest and the safest way in which you can make an investment and you can actually achieve your financial goals. So as I said, if your money earns less returns, you will either have to invest more. This is the first method. The second method is, or you will have to stay invested for a long time in order to achieve that financial goal. But when you invest, when you make your money work for you, or when you earn returns which are higher than what the traditional investments like bank deposits, post office deposits, and other fixed income investments give you, you will find that it is very easy to accumulate the corpus also, and that is what is going to give you financial independence. So saving may give you financial freedom, but investments actually give you financial independence. However, it is always advisable not to take the advisory in your own hands. So just like, when you are sick, you visit a doctor, okay, or when you want to build a house, you go to an engineer, you go to an architect. When you want to make clothes, you go to a tailor. You don't do all these things yourself, do you? You don't. Why don't you do it? That's because each and every example that I've taken requires expertise, requires experience, requires a lot of training. So today, if you suddenly tell me, Konina, why don't you stitch your own clothes? I will not be able to do it. And even if I manage to do it, probably it will be something else, maybe a pillowcase instead of a piece of clothing. So that might just happen because that's not my line. That's not my field of expertise. So this is again something you should leave to the experts. And that's exactly why we are here today, to give you a little more of insights into the equity market. The reason why we call the share market an equity market is the investors are equally liable for losses as well as the profits that are made by these companies. That is why it is called equity. You become a shareholder of the company when you buy the company's shares, which also makes you liable to share the losses along with the other shareholders. So going a little bit more into the equity market, it's a little important for us to note some of the basics, because whenever someone talks about equity markets, these are some of the terms that you will be able to hear. So you will hear about the stock exchange, you will hear about buyers, sellers, you will hear about brokers. Now, a couple of decades ago, the stock market, so it used to be called stock market. The stock market, was very much like the bazaar that we have today, from where you buy fruits, from where you buy vegetables. It was very similar to that. So you had all the buyers and sellers coming at one place. So the sellers, they would auction that I have so many shares and this is the price that I'm looking at if I want to sell the shares. The buyers also would come to the same place and there would be an auction. So how many of you have seen the film Guru? But I think it was out some 15 years ago. Anyone saw the film Guru? You did? Okay, Meenuji. So you would remember how that auction would take place, where Abhishek Bachchan representing Dhirubhai Ambani, he would go to the stock market and he would do the auction. So whoever was willing to pay the highest price would get the shares. The seller would sell his shares to the buyer. That is how it used to happen. But however, now it is much more regulated. So you have SEBI, the Security and Exchange Board of India, coming into the picture, the regulator which actually regulates the stock market. So now whatever transactions happen over the stock market happen over the stock exchange. So it's no longer a physical market like it used to be maybe 30-40 years ago. So you have SEBI with rules, with regulations, and everything happens online now. So no physical buying and selling of shares happen. So you have the stock exchange coming in between. The two major stock exchanges that we have in India are the National Stock Exchange, and the older stock exchange is the Bombay Stock Exchange, the BSE. So these are the major stock exchanges that we have in our country. These work under the specifications and under the regulations that have been issued by SEBI, the Security and Exchange Board of India. So the stock market in India is highly regulated. In fact, SEBI is so stringent, and the rules of SEBI control the stock market are so sound that many of the international exchanges actually emulate those rules. Do you know even the stock exchange of the USA, they follow certain rules that SEBI has implemented in the Indian stock market. So it is so stringent and it is so safe. So all those problems which used to happen some 40 years ago in the physical market, like the buyer has sold the shares, but the buyer has bought the shares, he's paid the money, but the seller has not yet delivered the shares, or the other way, the seller has delivered the shares, however, the buyer has not yet paid the money. All these problems of default and everything has been taken care of. So now everything happens through a stock exchange and a broker. So the buyer and seller, they are represented by the brokers. The buyer cannot place a direct order to the stock exchange. The seller also cannot place a sell order to the stock exchange. They will have to do it through a broker. So you can say the broker is the connecting link between the stock exchange and the buyers and the sellers. So at IIFL Securities, we are the brokers. So if you are my client, whatever orders you issue to me, we will route those orders to the stock exchange. Okay, the orders will be cleared. So the stock exchange itself is going to select the buyers and the sellers. So there is, I do not know who I'm selling to. The buyer doesn't know who they are buying from, because everything is being routed through the stock exchange. And the settlement is also done at the end of the transaction. That is also being taken care of the brokers, the registrars, and the stock exchange itself. So everything is very well regulated. You just place the order through your broker. You can't place an order directly to the stock exchange because that is against the regulation. That is not allowed. So over the counter transactions, as they were called, is no longer valid today. So you have to invest in the stock market through a broker. So that has to be done. Now it's your choice of the broker. If you choose the wrong broker, then again, that may land us into trouble, because the right type of investment and the right type of advice is very, very, very important when you make an investment in the stock market. So do be careful about it. Don't be guided by false commitments. Okay. So please look into the sanctity of the promises that are made to you before you start investing, because every other person or every other broker or every other person claiming to be a representative of the broker will come to you and approach you. So very, very, very important to choose the right kind of broker. So just as a parent, you are going to choose the right school for your child. Okay, as a patient or the patient's party, you are going to choose the right hospital or the right doctor for your patient. It is very, very important to choose the right kind of broker. So you're not going to compromise with the treatment just because, some doctor may charge you a little less, or you are not going to compromise with your child's education just because some school is charging school fees, which is a little lower than other well-known schools. So it's just like that, the way you choose the school for your child or a doctor, you need to choose your broker and you need to choose your investment advisor also. So moving forward, nowadays, in order to make everything online, it is important to have what is known as a DMAT account. So you open a DMAT account with your broker. A DMAT account is nothing, but it is, like your bank locker. So just like you have a locker with the bank where you store your valuables, your securities, or the shares, these are called securities. So the shares that you buy will be stored in an electronic format in the DMAT account. So this is where you store the shares electronically. So nowadays, those shares in the form of paper, the shares in the form of certificates are no longer issued. So when you buy a share, the shares will show in your DMAT account. When you sell the shares will be taken from the DMAT account and will be sold electronically. So no need of those physical transfer of certificates. So previously what used to happen is, when DMAT accounts were not compulsory, people would buy shares and then sell shares. So there would be transfer of name, there would be transfer of ownership, and that would take another 15 days. Now the entire transaction takes 2 days. So we call it T+2. So if you do the transaction today, everything should reflect in your DMAT account in just 2 days. So easy for you to maintain the account also. So a very low cost option. And there is no limitation to the size of a DMAT account, unlike your bank lockers where you have a small locker, where you have a big locker, where you have an even bigger locker. So the locker size will have to be chosen, and that is also going to depend upon the value of the fixed deposit that you have with the bank, and also the locker rent, so many things. But here, the same charge for everyone. There is no size of a DMAT account. You can hold any number of securities in your DMAT account. So a single DMAT account will suffice. You can hold everything over here. What are your advantages? So it's a very low cost proposition, number one. Number two, everything will be stored electronically. So you don't have to fear losing your certificates, or, in case there is a natural calamity which might happen with me, my shares are safe because everything is there in the DMAT account, and it's very easy for you to maintain. Also, you have online applications now from where you can download your statements whenever you want, and you can download your latest statement as and when you need. So why I insist on, a DMAT account and downloading your statements? Because see, just like me, I'm a working lady, and I know how difficult it is, okay, to monitor my own accounts. And for me, the time that I get to maybe go through my statements is probably late in the night when the entire family is off to sleep. So, I sit with my cup of coffee. This is my mug, the big one. And probably at 11 o'clock when the entire family is, off to bed, that is when I sit and scan my statements. Now, it's not that every day I can do it. Like today, I know I'm going to be very tired because I started my sessions from 10:30 in the morning. So it's been going on. So today, probably I will not get the time to sit with my statements. So probably it will be sometime next week. But if I had to go through physical statements, if I check those statements 10 days later, that statement is already old. It has no meaning for me. So I download my statements when I get the time to go through those statements itself. So, I have these mobile applications installed on my mobile phone. I just download the app, download the report whenever I want, and I go through the report. So the latest reports are always available with me. I really don't have to depend on anyone. I don't have to disturb anyone for my reports. So everything is available because everything is present online. So that is the advantage of having a DMAT account. And nowadays it's a rule. It is, a regulatory guideline that if you want to transact in shares, you must have a DMAT account because your transactions will pass through this DMAT account only. Okay, so this reduces the chances of default. This reduces the transaction time. So these are some of the benefits. At the same time, the biggest benefit is that it comes at a very, very low cost. So I just discussed why we should have a DMAT account. So a single DMAT account to take care of everything, all your documents, everything stored in electronic format over here. A single report will show all the transactions. So you don't have to extract reports from different places in order to, go through your investments. And I think for me, the biggest advantage is that if something happens to me today, that single statement is going to tell my family where all my investments are. So they don't have to run around from pillar to post, trying to figure out what investments I have and with whom. So everything is there in the DMAT account. And not only shares, you can also hold your mutual funds, your bond investments, your corporate bonds, your government bonds, everything can come into the DMAT account. So all investments can come over here. In fact, nowadays you also have insurance repositories to store your insurance investments, okay, or to store your insurance policies. So whether it is your auto insurance or whether it's your health insurance policy, everything can be stored electronically. So think about it. So here again, equity investments, as I said, are related to the stock market. There are different ways in which you can take exposure to equity. It can be through shares, it can be through mutual funds, it can be through government securities or other products also. So I won't be talking much about it because this slide itself can take me a couple of hours, but I really don't think we need to harp upon it so much. But just to give you an idea that you can have everything in your DMAT account. And of course, for the right type of advice, you must approach the right kind of broker or the right kind of advisory body. So that is something very, very important. So in India, advice always comes for free. Just remember that. Okay. So the only thing that comes for free in our country is advice. So everyone is there to advise you, but be very, very choosy about the advice that you take, because the person giving you the advice may not be equipped enough to give you the right kind of advice. But, since we have, it's like in our country, this is what happens. Advice always comes for free. So, this Corona, the word. So I'm a Bengali. Corona in Bengali means don't do or do not do it. So, when this Corona came in first, so we said, oh, Bengalis, so Corona is always there. Kuch bhi karo, they say Corona. Okay, mat karo. Because, we are in that mode where we love to give advice, and it comes for free. We really don't think that, advice is something that is specialized. Only give it to people who need it, but ऐसा नहीं होता है. So इसीलिए जब भी आपको कोई भी एडवाइस मिल रहा है किसी भी चीज पर, बी चूजी अबाउट इट. ओके, थोड़ा सा इसके ऊपर रिसर्च कीजिए कि ये एडवाइस मुझे लेना चाहिए कि नहीं लेना चाहिए. ओके, सो moving on, I won't spend much time over here. So this is the way in which the stock market works. So as I said, the buyer or the seller is represented by his broker. So all requests to the stock exchange are placed through the broker. So that is why you must have a broker who will be your representative. So आप broker के बगैर stock market में venture नहीं कर सकते. This is number one. तो broker आपको choose करना है. Broker के साथ आपको DMAT account open करना है. And the entire settlement of the transactions happens through parties called registrar, who actually check documents, who actually see the sanctity of the documents. And the DMAT account is maintained by a depository in India. Again, we have two depositories, the NSDL and the CDSL. So these are the people who hold your DMAT lockers. तो जो आप डीमैट अकाउंट ओपन करते हो वो आप डिपॉजिटरी के साथ करते हो, and the depositories charge you a fee for it. So just like you pay a locker rent, you need to pay a DMAT AMC charge also. Okay, and the DMAT accounts are maintained by two companies over here. One is the NSDL, the other is CDSL, the two companies which open DMAT accounts. Now let me give you some interesting facts about the stock market. Are you aware of what the Sensex is? What is Sensex? Anyone? Sensex? So it's basically an index. It is made up of, this index is made up of 30 stocks, 30 companies. Basically, the reflection of these 30 companies give you a reflection of the stock market. Very correct, Yamini ji. It's an index, one of the indices that we have. So this index is made up of some 30 companies. It's a list of 30 companies taken from different sectors. The movement of the Sensex actually gives us an idea of how the stock market is moving. That is why it's called the index. Two important indices in our country. One is the Sensex, which is maintained by BSE, Bombay Stock Exchange. The other is the Nifty. Okay, or it's called Nifty 50 because Nifty index is made up of 50 stocks, and that is maintained by NSE, the National Stock Exchange. So these are the two important indices that we have. However, index is nothing but it's a reflection of how the stock market is moving. The companies in the index are chosen in such a way that all sectors which are there in the stock market find a place in the index. So the movement of the index is going to tell us how the market has been moving. So if you see the journey of the Sensex, I will show you some data over here, and you have to, and I'll ask you some questions. So just take 30 seconds of time to see this graph. So this graph shows the movement of the Sensex from 1991 to 2018. So I didn't take 19, 20, 21 because of the Corona problem. So, those 3 years would not have been the right reflection of the stock market. So from 1991 to 2018, you have the Sensex readings over here. The green bars reflect those years when the index had given a positive return, and you can see the percentage of return showing over here. The red bars show those years where or when the index had given negative returns. Okay, so just to have a look at this graphical data, and I have a few questions for you. A little bit more of information. So in total, you will find that there are 28 readings. Okay, 20 readings out of these 28 are positive readings. 8 readings out of these 28 readings are negative readings. So in 28 years, in 20 years, Sensex gave a positive return. In 8 years, Sensex gave a negative return. Now, I request you to go through this graphical data and share with me 3 observations, any 3 observations that you might have from this reading. You can use the chat window to respond. Any 3 observations. So what do you observe from this graphical data? कोई भी 3 ऑब्जर्वेशन आपको बताना है. हो सकता है आपने 5 ऑब्जर्वेशन किया है, पर आपको बस 3 ऑब्जर्वेशन मुझे बताना है. Any 3. Or if you have 1 or 2, even that would do. Okay, let me see. I find something which has come up on the chat. Yamini ji, 20,000, 2000 Y2K. Okay. I did not understand what you are trying to say, Yamini ji, but if you can be a little more elaborate. Any observation? ये डेटा देखकर आपको क्या लग रहा है? एक मैं अपना एक observation आपके साथ share कर रही हूँ. I'll share one observation of mine with you. Probably that's going to maybe kind of a hint, or maybe you will be able to understand what exactly I'm looking for. So I find that in 28 years, most of the time the index has given a positive return. So if I can stay invested for 8 years, 20 years or 20 times I will face a positive return, 8 times I may face a negative return. So that's my observation. Brindaji, recession affected the market. Okay. When did this happen? Trade Center, USA Trade Center blast. Okay. When was it? When was this? World Trade Center? That was in the year 2000. Okay. 2002. Okay. Okay. What? Fine. So you say recession. 2007. What happened in 2007? Because nowhere in the graph we have spoken about the Trade Center blast or Y2K problem. We have not spoken about them. If that was the Y2K problem that you were talking about, 2008 recession, okay, but it doesn't talk about recession anyway. Anywhere. Okay. Let me share my observations with you. Number 1, what I see is that if you take blocks of 10 years, मतलब 1991 से लेके 2001 लीजिए, 1992 से लेके 2002 लीजिए. If you take blocks of 10 years or 15 years, you will find that your chances of making a loss are much lesser than your chances of making a profit. Do you agree with me? If you take blocks of 10 years or 15 years, you will have more years where you have made profits and less years where you have made losses. This is one observation, okay, from the graph. So take blocks of 10 years or take blocks of 15 years. Number 2, my second observation. Whenever there has been a major dip, so one example that you see here is 2008, okay, when the subprime crisis affected the US and there was a global recession. So a big dip, you can see in 1 year, the Sensex gave a return of minus 52%. So you could say half the corpus got eroded in 2008 for all people who had invested before 2008. But in the very next year, the market made up for the loss, isn't it? See the graph of 2009. The market gave a return of 81%. So it made up for the loss that it had made in the previous year. So whenever there have been major dips, the market has always made up in the subsequent years. That's my second observation. Why does this happen? Because major dips happen due to a global crisis, and global crisis cannot last for long. Okay, so maybe 1 year, 2 years, 3 years, because of this corona problem, because of this coronavirus, you can see that it is dragging. This is the 3rd year. So there may be crisis like that, but it cannot go on for long. But these are opportunities to enter the market. So that is why you will find experts always say buy in dips. Enter the market when the market has dipped, because that's a buying opportunity. Okay. Whereas for us, okay, people who do not seek advice during investing, we actually do the opposite, because we follow something called the herd behavior. So what do the animals in a herd do? They follow the animal in front of them. So you will find that wherever the herd goes, the rest of the animals follow without even trying to understand where the herd is moving to. That's called a herd behavior, when investors follow other investors without even analyzing where they are going. So that's a herd behavior. You will find that when investors start investing, the market keeps moving up because money is going into the market. Other investors also think this is a good opportunity, the market is rising, and they enter the market at this point, which means that they are buying at very high valuations. The opposite behavior is observed when the market starts falling. So people start selling off. Okay. People start selling off securities. The market keeps falling because people are withdrawing money from the market. What do the rest of the investors do? They also start selling, thinking that the market is falling and it's going to fall further. They also sell off, booking losses, and they come out of the market. That's also because of herd behavior. Whereas Warren Buffett says that, you know, the behavior should just be the opposite. And I'll show you why he says so. So you will find that, as I said, I have shared two observations. Yamini ji says, even now, because of Russia-Ukraine war, there is a catastrophic fallout. Yes, you are very correct, but this is a very, very good buying opportunity. In fact, I was just attending a webinar. I was a part of a webinar just because before I started this session over there, we were saying this same thing to clients, that this is a buying opportunity. Do not miss out this opportunity, because you are getting securities at a very, very good price, at a very, very good value. But yes, which security to buy, that is something about which you must seek proper advice. Okay, so this is my observation over here. The most important observation which I've shared with you is that if you stay invested for blocks of 10 years or 15 years, your chances of making a loss will be minimum. And that is what I would like to show you in the next slide, this one. So here I have taken the rolling returns of the Sensex. Okay. So I have taken 1 year rolling return. 1 year rolling return matlab, if I start from March 80, from March 80 to March 81, this has been the return. Again, from March 81 to March 82, this has been the return. So like that, I have taken blocks of 1 year. I have taken blocks of 3 years. I've taken blocks of 5 years, 7 years, blocks of 10 years, 12 years, and a block of 15 years. And I have also given over here the number of observations that I have made, out of which how many observations have given a negative return. So if I take a block of 1 year, there are 34 observations which I've recorded, and 11 observations are negative. So you can see yearly rolling, 34 rolling returns, 11 readings of negative return. For 3 year block, 32 readings, 6 negative returns. And similarly for 5 years, 7 years, 10 years, 12 years, and 15 years, you can see the number of readings, and you can also see the number of years of negative return. You will find that when you take bigger blocks, or in other words, when you stay invested in the market for longer periods, remember, it is important to spend time in the market. When you stay invested in the market over longer periods, you will find that your chances of making negative returns become zero when you stay invested for periods above 10 years. So that is why I said when you take blocks of 10 years and 15 years, you will find that your chances of making a loss become zero. Okay. So the market is a place for making money, but you also have to show patience. People lose money because they are impatient. They enter the market at high valuations and they leave the market at low valuations. Whereas the behavior should be just the opposite. And that can only happen when you're seeking the right kind of advice. Otherwise, you will not know when to enter the market and when to quit the market. Had you known that, if it were that easy, then we would have had Rakesh Jhunjhunwalas here and there. Okay. then you wouldn't have only one Rakesh Jhunjhunwala, you would have had millionaires and billionaires everywhere. But this also requires expertise, and you must seek professional advice for this. So the key learnings would be equity is actually the wealth creation tool, and it is not risky in the long run. So as I said, I'm not scared of the equity market. I'm just not scared, whether it be the corona, whether it be the Russia-Ukraine war, whether it's a subprime crisis, it could be anything. I'm not scared of the equity market. Okay. So, okay, there's a message, but he is in trouble with India Bulls housing. That's only one. That's only one. Don't worry. He's got so much that is really not going to affect him. Again, don't go by the news, because he himself hasn't told you this. So don't go by the news. Okay. So the magic of compounding, the effect of time works like magic on your investments. So stay invested. Don't quit your investments now and then. Associate every investment with a financial goal that you have. Okay, so if this is why I'm saving or making this investment, say for example, for my child's higher education, I will only utilize this money for my child's higher education. If I'm saving this money for retirement, I'm only going to utilize this money for my retirement. If I'm saving this money to plan for a magic vacation with my family, I'm only going to utilize this money for that magic vacation. So associate a financial goal with every investment that you have. It's only going to make your investing more meaningful, and it's going to motivate you to stay invested. So if you invest without any goal, so okay, ठीक है अभी मेरे पास कुछ पैसा, चलो मैंने invest कर दिया, then the tendency would be to withdraw that investment the moment you make some profit. The moment you realize some gains, the tendency would be to withdraw those investments. So associate a financial goal with your investment so that you feel motivated to stay with it. So these are some of the share price movements. So when I say that you stay invested for the long run, this is what I mean. So see, some of the companies, of course, now, of course, the investment advisory should change. If you had invested in these companies in the year 2008, in 2018, that is in a matter of 10 years, this is how the share prices have jumped. And this is the kind of returns that they have given, CAGR, year on year. This is the compounded returns that these stocks have given. Of course, this is not the advice we are giving you now. This is just to show you what kind of magic can happen in the stock market. Please note, this is not an investment advice. I'm not giving you any investment advice, just showing you that if you can stay invested for long periods, this is the magic that can happen. But of course, these magic tricks can only be given by your advisor. Not everyone will know the names of these companies. So this is the kind of magic that the stock market can do for you. And this is the slide I wanted to show you. This is what is told, correction in the market will always be temporary. So that is why I said whenever there has been a huge correction, the market has made up for this correction in the next few years. The market has given you much, much more than what it had taken for you. So taken from you. So correction is always temporary, whereas growth is permanent if you stay invested in the market. And the risk in the market arises because people become blind to the risks. So when people are blind to the risks, they unnecessarily assume higher risk to invest in the market, and people also become blind to the buying opportunities in a falling market. That's also the reason why they book losses. So please remember, the right time to enter the market is when the valuations are low, when the market is down. And the right time to quit the market is probably when the valuations are high or the market is high. People just behave in the opposite manner. But when it comes to investing in gold, the behavior of people are correct. It is as per it should be. So, when the price of gold falls, we are happy. We are not scared that what happens, oh my God, all the jewelry that I have, the valuations have come down. We rush to the jeweler to buy more gold. Okay, but when it comes to shares, when it comes to other securities, the behavior of people is just the opposite. When the prices fall, they panic. Whereas that is the time when you should go and buy more. So that is why it is said that people become blind to opportunities in a falling market, and people become blind to the risks in a rising market. Because if the market has risen, it must fall sometime. So it's very important to know the right time to enter the market so that you don't ride the fall. So asset allocation is important. So there are three types of investment classes basically that you have. One is your equity, that is your stocks. The other is your debt. Debt is basically those investments where you will be able to earn a fixed interest at the end of the term. Those are your debt investments. And the other very popular type of investment that we have in India is gold. So these are the three asset classes that we have. The best way to design your portfolio is to have a perfect balance amongst these asset classes. Always remember one thing: higher the risk, higher the return. So if you are willing to assume higher risk, you will be able to earn higher returns. Look at it the other way. If you want to earn higher returns, you must assume higher levels of risk than other people. But yes, this risk can also be a calculated amount of risk that you are taking. Again, the calculation has to be done by experts. So this is again not your cup of tea, not my cup of tea. Again, when I mean your cup of tea, I don't mean the people who are there in the discussion. This may not be everyone's cup of tea. This also requires specialization. However, higher the risk you assume, higher the chances of you earning a return. Or if you want higher returns, you must assume a higher level of risk than other types of investments. So your gold investments have the least amount of risk. So you can see any investment portfolio comes in the form of a pyramid. The least risky investments are at the bottom, which are your gold investments. Then you have your debt investments. Debt investments are also called your fixed return investments, because if you have invested X amount of money for Y amount of time, then Z is the amount of interest that you're going to earn in this period. So that is why it is called fixed return investments. And then you have your equity investments, which are related to the stock market. It can be in the form of direct stocks, it can be in the form of mutual funds, or it can be through other type of investments which indirectly invest in the stock market. So those make up your equity investments. However, all types of investments have some kind of avenue for all types of investors. So even if you are a low risk seeking investor, you have certain options in the stock market also, which will mitigate your risk to the minimum, at the same time give you returns which are higher than your fixed deposits and post office deposits. Okay, even if you are a high risk seeking investor, you have a lot of opportunities in the equity market or in the stock market. But you must take exposure to equity, you must take exposure in the stock market, because that is the only way in which you can beat inflation. So you now know about inflation, right? So the rising oil prices. So how the price of petrol, how the price of LPG has increased. Okay, so inflation is a reality. Inflation is a macroeconomic condition which you will not be able to mitigate or handle. However, if the inflation is at a rate of 10%, 10% means what had cost you 100 rupees last year is going to cost you 110 rupees this year. So if you have inflation at 10%, and if your money is growing at 7%, then there is degrowth of money. So the cost of goods has risen by 10 rupees, whereas your investment of 100 rupees has given you a return of 7 rupees, which means in order to buy that particular item for which you paid 100 rupees last year, you will have to pay 110 rupees this year. Your bank investment has given you 7 rupees interest. So another 3 rupees you will have to pay from your pocket. Okay. So always invest in avenues which are able to beat your inflation. That is very, very important. Otherwise, we will have to compromise on the standard of living. So I'll take a quick example, won't go deep into it. So say as a parent, I need to fund my child's education. I require 1 crore and I have 20 years of time, and I can invest 1 lakh annually. Okay. So if this investment grows at a 12%, so why did I say 12%? If you take advice from here and there, this is the maximum rate at which your investment will go, 12%. The best return that you can get if you take advice from here and there without being choosy, without being analytical. So your 1 lakh of investment every year for 20 years will give you around 72 lakhs, whereas your requirement was 1 crore. So what's the solution as a parent? Either I increase my investments today by 40%. So instead of 1 lakh, I invest 1,40,000 to achieve my financial goal, which I think is very, very difficult because there's a limitation to our disposable income. So suddenly, if I tell you that in order to gather this fund for your child's education, you have to invest 1,40,000 instead of 1 lakh, it will be very, very difficult for most of us. The other way is compromise on your child's education, send them to a lesser known business school maybe, where you can manage in 72 lakhs, or else take an educational loan. So these are the options I could think of. I don't know any other way. These are the options I could think of as a parent. But you can consider some other options also. You can consider these possibilities. So instead of your money growing at 12%, if the money grows at 15%, you achieve a corpus of 1 crore 2 lakhs. So you've just about made it. You needed 1 crore, but by making your money grow at 3% extra, by 3% extra every year, you just about achieve the corpus. If you make your money grow at 17%, you gather a corpus of 1 crore 30 lakhs, which gives you a surplus of 30 lakhs. But if you make the money grow at 21%, you have more than double of what you require. It's about 2 crores. Do you think it is achievable? Do you think these figures are achievable? Or which of these is achievable? So in the chat, your replies, please. Which of these figures, 15%, 17%, 21%, which of these is achievable? Which one? No answers? Is it getting boring, or am I going too fast? No? Okay, so what's your answer? So 12% is something which is very achievable. So you can take advice from here and there. So you can get as close to 12% as possible. Okay, but 15%, 17%, 21%, is it achievable? What do you think? Rupali ji, okay, mutual funds 21% is possible year on year. Year on year. Yamini ji, when I say 15%, 17%, 21%, I'm talking of year on year returns every year on an average. There are different means in which you can achieve these returns. Of course, as I said, higher return means you have to assume higher risks, but I can guarantee you AMG Invest has the answer. So I'm sure ma'am knows how you can achieve a 21%, ma'am knows how you can achieve a 17%, ma'am also knows how you can achieve a 15%. Of course, higher the risk, higher the return you can get, but yes, there are investment avenues, but about which not everyone will know. So that is why I said be very choosy about your advisor. Be very choosy about the person from whom you're taking the advice, because that person must be equipped enough, okay, to give you the advice. But yes, there are products. There are products, but only those people will know who do their studies regularly, who do their research regularly. Only they will know about the product. So start making your money work for you. Okay, so it is not easy to increase the income. It is not easy to increase your amount of investment, but yes, you can increase your amount of return. That can be done, but yes, that will require professional advice. So there are avenues. So who or what can make the difference? It is actually your investment advisor. So AMG Invest is associated with IIFL Securities. IIFL Securities previously was known as India Infoline. We have been in the broking business for 27 years now. We started in 1995. It was founded by two friends who are, ex-IIT, IIM. It was founded by them. We have been in the business for over 27 years now. So we are experts in the gold loan business. We are experts in the broking business, and we also have our own AMC, asset management company, which is IIFL Wealth. So we have our own mutual funds, we have our own fund managers, we have our own mutual fund schemes. So we are a very, very experienced company. If you do not enter the market now, if you do not seek right advice, and if you don't invest now, you are going to lose what is known as opportunity cost. So an opportunity will go from you. Never delay your investments, because the biggest factor which helps your money to grow is time. So if you delay investments, you will have to pay the cost of delay. Cost of delay means you will either get less returns in the same amount of time, or if you want to achieve your financial goals, if you want to achieve a particular fund value, you will have to invest more. So cost of delay means you have to invest more to achieve the same corpus if you start late, or else if you have the same amount of investment and if you start a year later, you will have to pay what is known as the cost of delay or opportunity cost. So just a minute, just give me a moment. I'm stopping the screen share for a minute. Just give me a moment. Just a moment, please. If you have questions, participants, can you keep posting it in the chat window? Just give me a moment. My PPT stopped all of a sudden. Just give me a moment. I will just restart the PPT. A moment, please. Just a minute. So just let me know if you can see the slide share.
Konina, it's not shared yet.
Now can you see, ma'am? Is it visible now?
Yeah.
Okay. Okay. So sorry. There was an error with PPT, so it had stopped all of a sudden. So what are the benefits of partnering as clients with AMG Invest? So as I said, IIFL Securities has been in business since 1995, and AMG Invest is partnered with IIFL. And what do you get as a client with AMG Invest? Let me just tell you the benefits that you have when you partner with them. So first of all, you will have a dedicated relationship manager to handle all your investment related issues. So when you invest, it is very, very important to stay informed about the investment decisions that you are making. So you will always need a dedicated relationship manager to service you. Check with your friends, check with your relatives. In most of the cases, other associates will make a lot of promises to you, but when it comes to delivering, they are unable to deliver. So I get a lot of complaints from other brokers and other clients saying that a lot of things were promised to us, but when it comes to the service, we are not getting it. So it is very, very important that you get the right service and at the right time. For that, you need a single point of contact, which is your relationship manager. So you will get a relationship manager, a dedicated relationship manager who will give you constant market-based inputs, research data, and we also have client training programs just like we are having now. So tomorrow, if you need any kind of training, you need any kind of tips, or you need any kind of information, we have regular client training programs as well. Now, at IIFL, we believe that the biggest differentiator can be technology. In fact, as I said, I was just attending a webinar, and there we were told that how the IT stocks have progressed, because, in the last 3 years, we have realized how dependent we are on IT and how technology has helped us, to keep our work going. And in spite of being in lockdown, we have been able to deliver just because we've taken care of technology. So we have all types of applications that are available to our clients, so that you have access to the latest market data and you have access to the latest reports that you may need. So we have market-based applications, we have web-based applications, everything that you require at your fingertips. So all applications are there, client-end applications, which you can access with ease at your convenience, and you can download the latest reports or have a look at your portfolio any time of the day. So once you are associated with IIFL, once you have a DMAT account with us, we will send you regular recommendations. We will keep sending you market updates. There are also various research reports which will be available to you on your mobile applications. You can access these reports any time of the day. You can also contact AMG Invest for advice anytime you want. All these facilities will be made available to you. Okay, and you will be also entitled to monthly reports, to regular mutual fund and stock recommendations. And as I said, we have regular training seminars, which are held weekly, which are held monthly. You have experts coming in to give their advice. Today, the webinar that we had, the client webinar, which was for a specific group, of course, there we had the fund managers coming in to give their views about the market. So that is where they told us that stocks are available at the good valuation, and this is the opportunity that investors should take up in order to, make use of the correction in the market that has happened, because from here onwards, the market is only going to go up because the war cannot continue forever. So once, this problem, this war between Russia and Ukraine is over, you will again find that the markets will recover. Already there has been a very strong recovery in the last few weeks. You would have noted from where Nifty had fallen and and where it is now. But however, the market is still available. The valuation is still very, very favorable. This is an opportunity which you must take up, but please approach the right advisor for it. And you have AMG Invest. Please note this. It's, a word of caution. As I said, advice comes for free. Everyone will try and give you advice. Okay. तो मैंने तो इसमें इन्वेस्ट किया था, बढ़िया पैसा बनाया मैंने. What is important is when he bought the stock and when he sold the stock in order to make money or in order to book profits. That is very, very important. It doesn't mean that if I have made profit by purchasing XYZ stock, you will also make a profit if you buy now. So please don't, take any advice that comes your way. This requires expertise. This requires a lot of study. This requires specialization. At IIFL, we have a very, very good research team. We have SEBI registered research analysts working for us, and the tips and the recommendations that come from IIFL and the tips and the recommendations that will come from AMG Invest will all be backed by these research reports. So please stick to the advice which is coming from AMG Invest, because these are all very, very well researched advice that will be coming your way, right? So this is what I had from my end. Let me see if there are any questions in the chat. What is the minimum amount to start investing in stocks? Rupali ji, you have, ma'am. Ma'am, maybe you can take it up later on after the training. You can.
We'll get in touch with Rupali ji and we'll just explain to her how it can.
Right. Right. Okay. What do I do with India Bulls? Okay. I followed RJ. Again, ma'am will take it up on a one-on-one basis. There are certain things which she will have to check when you invested.
Yes.
What is the value of your portfolio now? So she will take it up.
On that, we can just, yeah.
Absolutely. Absolutely. So a lot of things to be looked into before she can give you the right advice. So she can take up your query.
So our team will get in touch with you, sir, and we can take it up from there.
Sure. Any other queries regarding the stock market? So we just did a basic overview for your portfolio analysis. Please get in touch with AMG Invest. So they will help you out.
And regarding any suggestions or any particular topics you want to have, inputs, we are always there to assist you. We can have more sessions, to equip yourself, because our idea is to make yourself equipped, to have the basic knowledge about the markets. When you're taking advices also, you should have a knowledge about the market, how it goes and what is happening in the market. So this is a major idea, we have started this webinar. So kindly let us know your feedback about today's session so that we can work on including more and more topics that can help you in your, investment journey. So that is what we are looking for. Any more queries that has to be answered by Konina? You can just raise the queries now. Yes, we are definitely, AMG Invest is looking forward to have a teen session, financial literacy session for teens. So definitely we'll be coming up with that also. Thanks for your feedback. We'll definitely look into it.
Sure. Thank you so much. I had kept my video switched off because there was some network issue at my end, because of which the PPT was.
No problem, Konina. It was a very wonderful session and quite insightful. And you just made us all active. I think all the participants are having the same opinion.
Good, great. And definitely we can have something for teens. I can also show you some financial calculations, which will also help you get an idea of what is the corpus you can arrive at if you stay invested for a certain period of time, or what is the value of the investment you should start with. So to address one of your questions, what is the minimum amount? See, there's no minimum amount.
Yeah, that is
all depends on how much you need.
What is your target? Yes, what you want to attain?
Absolutely.
So based on that, we have to have a planning.
Yes.
So that is the reason we couldn't tell you a figure. And definitely the teen issue is a concern of our country, actually. Our country is the kids are not having that actual financial knowledge unless and until they are starting their own earning, so that is where we have to work out something. Definitely we will look into it. We will come up with a wonderful session for teens also. So I think we can wind up, right, Konina?
Yes, we can. If you do not have questions, then we.
Yeah, I think because of Friday and weekend, people are maybe.
I know.
Yeah. So anyway, thank you once again, each one of you, and looking forward to have a great association with you. Thank you, Konina.
Thank you so much. Have a nice weekend, all of you. Stay safe. Bye-bye. Take care.
Bye.
Thank you. Bye.